Hold everything. Don't touch your portfolio until you watch this. The week of June 9th to 13th was a heart-stopping roller coaster for tech stocks. Skyrocketing gains, brutal sell-offs, and a geopolitical bombshell that could flip your investments upside down. I'm the Stock Bro, your guide through the chaos, and we're diving deep into the tech market madness. From Oracle's epic rally to a Middle East crisis that's spiking oil prices, plus we'll unpack what the Israel-Iran conflict means for your money. Smash that like button, grab a coffee, and let's jump in. Your next trade could be a make or break. Let's set the stage. The S&P 500 kicked off at $6,005 on Monday, climbing to a high of $6,045 by Wednesday, but bam, Friday hit like a freight train, dropping 1.13% to close at 5,976, down 0.48% for the week. The Nasdaq mirrored the ride, peaking at midweek, then sliding 1.02% by Friday. The Dow, down 1.3% overall, lagging behind. Early gains came from a breakthrough in U.S China trade talks, but Friday's news of Israel striking Iran sent markets into a tailspin, with oil prices surging 7.6% to $73.20 a barrel. This wasn't just a bad day, it's a warning sign. Was this a blip or are we headed to a storm? Let's break it down. Tech stocks were the heartbeat of this week, delivering fireworks and faceplants. Oracle was a superstar, skyrocketing 13 to 14% on Wednesday to a record $201 after smashing Q4 earnings, $15.9 billion in revenue, up 11%, with cloud infrastructure up 52% to $3 billion. They're forecasting over 70% growth for 2026. Talk about an AI juggernaut. Tesla rode 5.7% on Monday, fueled by hype for its June 22nd robotaxi launch, but got caught in Friday's sell-off. Intel jumped 8% Monday on trade optimism, then gave back 6.5% Tuesday. AMD's MI400 chip reveal for 2026, with partnerships like OpenAI and Microsoft, had traders buzzing, though its stock barely budged. But it wasn't all champagne and roses. Adobe tanked 5.3% on Friday, even after beating earnings, because investors wanted more AI magic. Nvidia, the AI king, slipped 2% in Friday chaos, and Apple dropped 1.2% after WWDC's iOS 26 AI updates disappointed, and with Sierra enhancements delayed. Micron's $200 billion US chip investments, backed by $6.4 billion from the CHIPS Act, kept it steady, up 38% year-to-date. Quantum computing stole some spotlight when it surged 30% Tuesday after Nvidia CEO hyped the sector, but fell 1.5% to $18.50 on Wednesday. Rigetti and D-Wave gained 18% and 2%, while IonQ rose 8%. Oh, and Chime's IPO, a 59% pop to an $18.4 billion valuation. Fintech still got juice. New investors remember, tech's a thrill ride. Oracle's hot, but don't go chasing it. Look at tech ETFs to spread the risk. Trade and geopolitics were the market's pulse this week. Monday's U.S. China trade talks in London were a game changer, locking in a framework where China agreed to supply magnets and rare earths with a 6-month export cap. No visa drama for Chinese students either. Stocks like Intel and the SM Rosie up 2.4% on Monday. Loved it, but by Tuesday whispers of a new 55% tariff on China sparked jitters. Then Friday dropped a bombshell, literally. Israel's preemptive attack on Iran, followed by Iran's missile retaliation. Markets cratered, the S&P 500 down 1.13%, the Nasdaq down 1.02%, oil prices skyrocketed 7.6% to $73.20 a barrel. Brent crude up 8% to $75. This isn't just headlines, it's a portfolio killer if it escalates. New investors, trade deals can lift tech stocks, but geopolitical stocks like this hit hard. Diversify to stay safe. For experienced investors, semiconductors are tariff sensitive. Energy stocks like Occidental Petroleum are up nearly 4% and could hedge your bets. Let's talk about the elephant in the room, the Israel-Iran conflict that tanked markets on Friday. This isn't just news, it's a political game changer for your investments. Here's what could happen and how it could hit your portfolio. So, the best case scenario, cooler heads prevail, Israel and Iran de-escalate through diplomacy, maybe via UN or US mediation, and oil prices stabilize around $70 to $75. Inflation stays in check, and the Fed keeps rates steady. Tech stocks like Nvidia and Oracle rebound as risk-off selling fades. Your portfolio breathes a sigh of relief. Growth stocks thrive in a stable environment, and ETFs like QQQ could rally 3 to 5% in a week. You're back to sipping coffee, not sweating bullets. So, what is the worst case scenario? The conflict spirals into a full-blown war. Iran restricts oil exports, pushing prices above $100 a barrel. Inflation spikes to 5%, forcing the Fed to hike rates, crushing tech valuations. Think 10 to 15% drops in Nvidia, Apple, and Microsoft. Supply chain disruptions hit chip makers like AMD, and consumer spending tanks, dragging down ad-driven stocks like Meta. Energy stocks like Occidental soar, where your tech-heavy portfolio could lose 20% or more, and you're checking your brokerage app in a panic. So what is a realistic scenario? The tensions simmer but don't boil over. Limited strikes continue. Oil hits maybe $80 to $90 a barrel, and inflation creeps to 3.5%. The Fed stays cautious, keeping rates flat on June 18th. Tech stocks dip maybe 5 to 7% short term, but stabilize as trade talks hold. Energy and defense stocks outperform, while tech ETFs like QQQ see choppy trading. You're stressed out but not wiped out. Diversification saves the day. For new investors, this is why you don't go all in on tech. Mix in some SPY or energy ETFs to balance the risk. Experienced investors consider long positions on Occidental or RTX for oil and defense exposure. And use QQQ puts to hedge towards tech downside. If oil keeps climbing, inflation fears could reshape your strategy. On the economic front, we got a breather. Well, sort of. Tuesday's May CPI was a win, up 0.1% month over month, 2.4% year over year, below expectations. Core CPI at 2.8% was softer than forecast, and jobless claims matched estimates, showing a solid labor market. Treasury yields eased 4.42%, giving tech stocks room to breathe. But Friday's oil surge had analysts warning inflation could hit 5% if Middle East tensions escalate. That's a red flag for the Fed, and it could mean tighter policy ahead, which growth stocks like Nvidia hate. New investors, low inflation keeps tech happy, but oil spikes could change the game. Experienced investors watch the 10-year yields. If they top 4.5%, tech could take a 5 to 10% hit. Track bond ETFs like TLT for clues. Let's talk winners and losers, because this week had some stunners. Oracle crushed it, up 13 to 14% on cloud strength. Energy plays like Occidental Petroleum, Diamondback Energy, and APA Corp gained nearly 4 to 5% as oil soared. Defense stocks Northrop Grumman, Lockheed Martin, RTX rallied over 3% Friday on war fears. Cardinal Health up 4.6% after a profit forecast hike. And RH, a 20% surge Thursday on a surprise 13-cent EPS profit versus an expected 7-cent loss, with revenue up 12% to $814 million. Chime's IPO soared 59%, hitting an $18.4 billion valuation. But there were casualties. Boeing crashed 4.8 to 6% Wednesday after an Air India incident. GameStop plummeted 22% Wednesday on a $1.75 billion convertible notes offering, hitting a spring low. Adobe's 5.3% drop on Friday stung, and big tech, Nvidia, Apple, Microsoft, Amazon, Alphabet, Meta all took hits in the Friday sell-off. Airlines like Delta and United fell over 4% too. New investors, winners like Oracle showed tech's potential, but losers like Adobe prove you need balance. So what's next? The Fed's June 18th meeting is massive. Rates should stay flat, but if Powell talks tough on inflation, tech could wobble 5 to 7%. Adobe and RH earnings are key. Adobe needs an AI win to recover, while RH's 20% jump screams momentum. Retail sales data will show if consumers are still spending, and the Senate's Genius Act vote could shake up crypto. The Israel-Iran conflict is the wild card. If oil tops $100 a barrel, inflation fears could stank tech 10 to 15%. Don't get blindsided, stay ready. New investors, grab a tech ETF like QQQ to weather the storm. That's your deep dive into a crazy week. Oracle soared, Adobe crashed, and the Middle East threw a curveball that could reshape your investments. Are you riding Oracle's AI wave, hedging with energy stocks, or sitting tight? Drop your game plan in the comments. If this saved you from a bad trade, hit subscribe and make sure to watch the video on screen to be fully caught up. If you like this kind of content, make sure to click the link in the description or go to thestockbro.com for weekly market updates and stock analyses. Let's keep building this wealth together. Stay sharp, stack those gains, and I'll see you next week. Happy investing.